Rick, I don't know how you see this Brexit, soft Brexit. Are we less likely to have a difficult Brexit or a no deal? Or whether you just look at monetary policy for the BOE and expectations of inflation to make your decisions?
Yeah, no, we have to bear in mind the political context, but we also have to make sure we're not guilty of wishful thinking. I think many would want a soft Brexit or no exit, and I think they're picking at every possible straw, and I think that's a mistake. We should plan for a hard Brexit in terms of our investment thinking. And equally, if things turn out a little bit softer, that's a kind of boost.
So what does that look like, a hard Brexit, in terms of stock picking, but also in terms of BOE policy?
Probably means sterling where it is, or maybe even a little bit weaker, with some degree of imported inflation, counteracted by weak fiscal policy in the UK, costs rising, and at the margin, lower long-term growth in the UK, and to a certain extent the rest of Europe as well.
Within this is the spirit of the United Kingdom economy. How is it? I really can't get a handle on how the United Kingdom economy is doing right now. How is it?
Seems to have momentum, but political pressure mounting for looser fiscal policy to ward off real incomes eroding and a sense that public services are not where they should be. So I think it's going to have momentum for the time being. But if you see significant weakness in sterling counteracted by more wage demands, you could be faced with stagflation. That's a kind of tail risk for the UK. Central case is modelling along.